Hello and welcome to another episode of FinTech Focus TV with me, Toby Babb. Today we are back for the first time in a little while with a debate series. And we have got one hell of a lineup for you today, which I'm very much looking forward to introducing to you. First and foremost, she needs no introduction. She's been on the show many times. Helen Disney, how are you?
I'm very good, Toby. Good to see you.
Likewise. Matt Homer down there in the corner of my screen. Matt, how are you?
Doing well.
Fantastic. And last but my name is least, Jack McDonald. Jack, lovely to have you on the show. Thanks for joining us.
Hi, Toby.
So we will kick off just before we get into the whole concept of restoring trust in digital assets, which is a conversation I'm having all over the world at length at the moment. And I think it's a fascinating one because I don't think anything's going away. I've got my personal thoughts. Helen and I had a long discussion about this online yesterday, and I'm very passionate about where it lies as a subject. So we're going to get into the meat and drink of that. We've got some genuine experts to give you their thoughts rather than my wittering. So very much looking forward to hearing from all three of you. But let's start off with some introductions. Helen, tell us a little bit about yourself and TRG.
So I'm the Director of Blockchain and Digital Assets here at the Realization Group. We're a full service marketing and communications agency that really sits at this kind of intersection between traditional finance and digital assets and blockchain. So we're very interested in the movement between the two sides. We work with a lot of blockchain and digital asset startups looking to sell things into financial markets, and also traditional firms who are building digital asset solutions and moving into the market from their side. So as you know, Toby, we worked together last year on a documentary called The Era of Convergence, which was very much examining that trend, and now also writing a book on the same topic, which is coming out in November.
It is a topic that keeps on getting press, and I've noticed that there's numerous different people badging that headline of the Era of Convergence as well. So good to see the noise spreading. Matt, let's go over to you as an intro, please.
Sure, great to be with you. I'm the fund manager for an early stage venture capital fund called the Department of XYZ, and we invest in pre-seed and seed stage companies. And I'm also a board member for a company called Standard Custody, which is a member of the PolySign family, and have the privilege of working with Jack in that capacity. And I'm a former digital asset regulator with the New York State Department of Financial Services, where I oversaw the division that was responsible for licensing and supervising a number of large players in the space.
Well, there's definitely some stories to be telling on that one, I'm sure, with everything we've been talking over late. And Jack, nice to meet you. Tell us a little bit about yourself.
Thank you. I'm Jack McDonald. I'm the CEO of PolySign. We have three business units under the umbrella of PolySign. First, as Matt hinted at, we have Standard Custody and Trust, which is a New York regulated qualified custodian serving institutions. We also a year ago acquired MG Stover, the leading fund administrator in the digital asset space. And finally, we're working on a cross-asset settlement layer called Atomic Net, which is very interesting and plays into the whole tokenization trend that's getting a lot more airtime these days from both TradFi as well as the digital asset ecosystem. So excited to talk about all those with you.
Absolutely. And look, I think there's a really interesting sort of position that you guys come from, being based out in the States as well, where I think we've seen volatility across the sector, but none probably more so than in the US of recent months. And I think that's there's a very interesting narrative to have around that, which we're going to move on to in a second. But I want to start off by you both contributing to what I thought was a brilliant report that was put together by the Realization Group, looking at restoring trust in digital assets. And I think at that sort of stage of writing it and putting together, the market was in one position when as Helen alluded to earlier on, the Era of Convergence of the documentary. The world changed very, very quickly from when we published that documentary to when we then followed it up with restoring trust in digital assets. So 3 months later on, probably seeing another sort of swing and probably a bit of a positive thawing of the market in terms of what's happening as well. So I'm really interested to start with you, Jack, and just get your insight on where conditions are at the moment, whether and how trust is recovering a little bit. Obviously, there's been some contention around the space in the US as well. What's your take on how things sit at the moment?
Well, your question is very relevant, and when you say at the moment, we need to define that, because if you had asked me 3 weeks ago, my answer would be different.
This is exactly right. Yeah.
3 weeks ago, many were calling for the death of crypto and digital assets in the U.S. with the SEC, the double barrel approach to suing Coinbase and I guess it was Binance first and Coinbase, and maybe that reversed, under their thesis that all these assets, perhaps other than Bitcoin, are securities, and therefore, in the case of Coinbase, we'll just stick with them, that they've been trafficking in unregistered securities and all the kind of trickle down implications of that. And so for a lot of the institutions in the US who had been cautiously wading back into the water, or at least getting ready to, they reversed course and ran the other direction. And we really saw that happen, I think, over much of 2022, when there was a lot of institutional demand that everyone's been eagerly waiting for, and it was starting to come in. And then we had this string of events that are not worth going through right now, but the 3 arrows of Terra Luna, punctuated by FTX at the end, and all the investors that were contemplating entry just said, forget it, I'll wait for things to settle down before I come back in. That was starting to happen again, it felt like, very slowly. And I think with the SEC's approach, following some of the earlier pronouncements, new guidelines around custody, and some of other of Gensler's actions and comments had really served to keep the demand at bay. And that Coinbase Binance assault, I think, really punctuated a desire to be very patient and cautious. 3, 4, or 5 days later, we had this string of events that seemed to help restore at least an inkling of trust for institutions in the industry in no particular order. But the big moves, obviously, the BlackRock ETF, spot ETF filing, the SEC approving a Bitcoin futures ETF. You had other traditional finance asset managers either refile ETF applications or file some new ones. Everyone from, I think it was Invesco, Fidelity, ARC, Wisdom Tree. So all of these big name institutions coming back on, and that breeds a lot of trust. Then you had Deutsche Bank come out and file for a license, albeit in Germany, to enter into the institutional custody space. SocGen's Cassis, I think the next day, files an application to get into institutional custody. And so depends on which day you're looking at the fulcrum. Are there big institutions or regulators trying to slow the demand? And then you've got this just string of really, really positive announcements coming out, albeit that will take a little bit of time. But these are indications of material interest. These are institutions that have a lot to lose if, from a reputational standpoint, let alone a business standpoint, for being wrong or being overly aggressive. They're obviously thoughtful in their approach, and for them to come out and make these pronouncements and these actual, not just talking, but actually making, in the case of the ETF applicants, as well as the investment banks, real business moves, basically credentializing the movement and attesting to their belief that there's a real there. And so I think there's more positive than negative over the last 3 weeks, if we just want to kind of curtail your question to that time period.
We'll look at what happens next week, right?
Right.
I think the interesting thing about this is what makes the noise. So I've been, Helen knows my thoughts on all of this, is that bad headlines are always the ones that are going to sell the papers and shift the news channels around it. And when you're looking at all of that sort of news, it hasn't had the same sort of splash potentially. But I think there's, even in the UK, we see the Prime Minister is sort of very vehemently trying to make it a crypto hub and push the agenda for it. And you're right there when I think you look at institutional cash, and that appetite has never gone away when there's significant strain on them to make asset classes work and be profitable in various different areas. This represents a real opportunity if it's done right and gain that trust. And I want to talk about that and bring you in that from that regulatory point that we've spoken about a little bit, because the headlines were, particularly this side of the pond, and you can talk to us about it from where you sit. But over this side of the pond, it was like, here's an opportunity for UK as a crypto hub, because the US is starving innovation and driving crypto out of the US. That seems to have a little bit of a volte-face. It was maybe a little bit of a premature funeral, as we were alluding to a little bit beforehand. Tell us a little bit about what that looks like, and how with a diverse bunch of regulators in the US, and probably quite a complex scenario to be dealing with, how that sort of plays out and what it looks like for the future of digital assets in the country.
Sure, absolutely. I mean, I think that, part of the question, we were just talking about kind of this moment in time and like the last 3 weeks, right? I think your view of the world also depends on very much where you sit, right? And I'm increasingly spending more time talking with people outside of the US, and it's very therapeutic, I'd say, because there's sort of much more optimism. And as you noted, I mean, jurisdictions are jockeying, leadership positions in kind of the new financial systems that are emerging. And I think that's very significant. And it's not just sort of it's jurisdictions that you can just necessarily be dismissive of. I mean, serious jurisdictions have serious regulatory frameworks and are encouraging innovators to set up shop there. And that's significant. I think that's probably a 18 to 36 month window that countries have to do that. My view on the US is that we will eventually get our act together, but usually, we have sort of a habit of just driving right up to the edge of the cliff, and then suddenly realizing we're about to go off and pushing on the brakes. So I think we will eventually get there. I think, we've got like many other countries, we've got different pieces of government. I don't know that there is a unified view in government around crypto. There may be a somewhat unified view within among the federal regulators, although I don't even think that's the case, or to some extent among executive agencies. But so far we've seen, at least at the federal level, I mean, there are a few things to point out, right? Is that we've got a dual banking system in the US, which means that you can go to the federal government for licensing and supervision, or you can go to the state governments. That's important, and they sort of there's a healthy tension between the two that provides founders and innovators optionality. We've also got other at the federal level, kind of other parts of government that are just getting active. So the court system is just starting to get active around this issue, and Congress is very seriously considering at least 2 pieces of legislation. And so, I think we will eventually find an equilibrium, but it's going to be messy, and it'll take some while. So I think that, I think there is a tremendous opportunity, forward-leaning regulators in other parts of the world. But again, I think that's probably an 18 to 36 month opportunity. And we'll see some real, and that's a significant amount of time in this space, right? And I think it's an opportunity for countries to really lock in a leadership position for the long term.
I think it's an interesting thing you say about 18 to 36 months being, a long time in this sort of space when we're talking about 2-3 weeks and how much difference it can make at the same sort of time, right? And I think that's quite an interesting thing to bring you in, Helen, on that we have seen, since we started, speaking and talking about this and coming up with the idea of the era of convergence and the documentary and the conversations we were having. It's been a roller coaster. And actually, if I look back to the conversations we were talking about earlier on about where it was seen from institutions, even 5-10 years ago, then to saying this is going to be a mainstream sort of asset class within weeks, through to then months, through to then years, and then it being various undulations in between on it. That has an impact on trust. And we're talking there about crypto and in certain elements, but also digital assets as almost like two different things at certain stages. And I think digital assets actually sounds better to a number of people. It sounds more robust than certain people in terms of how it's marketed on its own. So I'm quite interested to hear your thoughts and about where this goes. We know that you've been deeply entrenched in the sector for some time. Some might say one of the world's foremost thought leaders in the whole space. So how does it play out, and how does it move from here?
Well, they do say crypto years are like dog years. So by that metric, I'm quite ancient by now. But I think, just looking back at the last few months, as long as or as short as they may have been, we keep quite a close eye on developments in this phenomenon of the era of convergence since we launched the documentary and since working on the book. And I think what's really interesting is the mismatch actually between the media headlines and the kind of regulatory tone and what's actually happening commercially, because not only have you got all these companies launching Bitcoin ETFs, but the rhetoric has completely changed. So if you think back, maybe only 4 or 5 years ago, major asset managers and big financial firms were saying, none of our clients are interested in crypto or digital assets. This is not really an asset class. It's nothing that we want to get involved in. Now the rhetoric from Larry Fink just in the last 24 hours is, Bitcoin's going to revolutionize finance, it's digital gold. These are kind of like the words of the crypto industry coming out of the mouths of one of the world's largest asset managers. So the rhetoric has completely changed. And I think also, some of the real world use cases are actually coming to the fore. So we had a breakfast this morning around blockchain and digital assets in ESG and how that's advancing. So things like tokenization of carbon credits, that whole agenda is being driven partly by change in policy, but also by commercial incentives. So, those things are really accelerating now. People really want to use the technology. I don't think there's any skepticism really around blockchain and distributed ledger technology as an enterprise application. There is still skepticism around cryptocurrency, but there's a distinction between digital assets and cryptocurrency, and the tokenization of real world assets is something that is really only the tip of the iceberg. It's only just started. That's going to be an enormous unlocking of value in the global marketplace. And, we're going to come on, I think, to central bank digital currency and stable coins. But again, we've got over 100 jurisdictions around the world experimenting with this idea of digitizing fiat currency and improving the on and off ramps between digital assets and the fiat world. And you can't really have the market without that. So those different sort of trends are all kind of speeding up at the same time. So if anything, I would say we're more mainstream than we've ever been, and yet the rhetoric is still very negative. So it's quite a strange combination.
I think that's quite an interesting point, isn't it? That the era of convergence is very much about this, the move from traditional markets starting to dip their toe a little bit more into the digital asset space, and the digital asset space looking to attract more and more talent, which we've seen this exodus of talent from traditional markets into the DeFi world. And within that sort of, I from my experience running a recruitment business, over the first 6 months of the year, you saw a massive slowdown in that, and probably a little bit of a caution and reticence of people taking the leap from, the so-called security of the traditional markets, which have had their own volatility over recent weeks, which probably doesn't get quite so publicized as potentially it does when digital assets are involved. Again, for trust reasons. I'm interested in the commercial reality because I've had this is by coincidence, and maybe because I've made a bit of more noise about it on LinkedIn recently, but I've had 3 people in the last 24 hours private message me on LinkedIn looking to make a move from traditional markets back into the DeFi world. So that's a trend that was an everyday thing for me over the back end of last year. It sort of definitely slowed down over the start of this one. Jack, I've seen you nod a couple of times in recognition on that. Talk to us about the commercial reality of what that looks like. Are we going to continue? Are we going to see more of that sort of play? What's the real world look like at the moment for people looking to do that? And does there remain an appetite of the decentralized world to keep bringing in that TradFi talent?
Well, I'd say 2 things. One, when I just got off a call with a POC, I think there's 70 different organizations who are a part of this, and without giving away the secret, they're largely composed of traditional finance folks, all the big banks, et cetera. And even for the people that are at the crypto firms today, like myself, have origins coming from TradFi. So I think there is a migration there. When you distill it down to what we're doing, I tell people, I think what we're ultimately as an industry focused on is really rebuilding a new operating system for capital markets. And so it stands to reason that you're going to be pulling folks who have been in the capital markets business and thinking about what a better future will look like, whether it's a quicker settlement time or less friction in terms of trading and custody and clearing, lower costs, guaranteed settlement. All these sort of initiatives stem from a belief that there can be a better world leveraging the technology that underlies cryptocurrency, namely blockchain distributed ledger technology. And so even if you are hesitant, let alone cynical or skeptical on the future of crypto, non-sovereign backed currencies, more and more folks are getting behind this view that capital markets can be made more efficient and that real world assets will be tokenized. And so that's pulling in a steady stream of professionals who want to be a part of that new evolution. From a perspective of an employer, we have about 180 employees working with us. There's a bit of an ebb and flow in terms of interest in crypto, particularly on the engineering front. 6 months ago, we had some people who, were saying, hey, this industry, isn't as promising as I thought 2 or 3 years ago, and I'm going to start looking for quote unquote a safer place to be. And the flip side is we've been on a bit of a hiring spree lately, where we're pulling in people who want to be a part of it. So it's very much dependent upon the cycle, the psyche, the news flow, and you couple that with many of the companies in this industry are startups, and so that just attracts a different, not only different type of talent, but a different mindset for individuals who are going to be owners in a business, who want the accountability of really making a contribution and being responsible for that, and being in a front row seat, where an evolution, where an industry is really being transformed, and there's higher highs and lower lows that go along with that, and so that attracts a different type of person.
And I think those sort of people are recognizing there that in certain markets it's quite difficult to get that same sort of value creation that they used to be able to get from it. So this, whilst there's risk involved in that, it still remains something there which people are ready to take. I remember early last year, I was in New York speaking to someone from an exchange, a crypto exchange, and he'd moved from a senior position in a major Chinese bank with a very safe role within it. And I asked him what the motivation was to move from there to here. I'd known him for a long time in that organization, and the predominant part of it was the tech. He was fascinated by the technology. He was fascinated by the use cases you say there beforehand, and where it can go, and where it can drive efficiency in a marketplace and revolutionize a market. And I think that's a really interesting way to look at things. Matt, tell me what you've seen in that sort of world.
Yeah, I mean, a couple of different aspects of that. I mean, so I think as it relates to the tokenization of real world assets, I mean, that is absolutely a trend. I mean, I think that there's demand from both sides, which is really exciting, right? So I think that within the institutional space, there's sort of I think there's, an assumption at this point that all assets will eventually be tokenized. And then on the DeFi side, there is, a real craving, I mean, for many in the ecosystem to be a part of that and to support the tokenization of those assets. I think where you see, and I think argue that even regulators in the US that have been skeptical of crypto generally have come out in favor of tokenization, kind of generally. So I'm thinking, for example, of the comptroller of the currency, who recently gave a speech on tokenization. I think where there's some, I don't disagree, maybe too strong of a word, but where there may be divergent viewpoints is where tokenized assets live. Do they live in a permissionless environment, an open, free, and decentralized environment, or they live in a permissioned environment? I mean, in reality, we'll probably have both, right, and kind of hybrids and multiple types of environments. But I think that is, I honestly think we're sort of at a point where just tokenizing value is not controversial, which is a huge accomplishment, which is something we should be happy with, right? Because so many other parts of the ecosystem have become lightning rods, but that tokenizing value, it's just sort of as a principle, I think is becoming accepted by all parties. And so that, again, the question is more about where it lives, where those assets live. But yeah, as it relates to talent, I'm definitely, it's interesting. I mean, I'm definitely saying, a lot of great talent continue to want to come into the space. People who left the space and realize that it's boring on the other side, and now that they want back in. I mean, despite the difficulties and kind of the challenge that the market is facing, they want back in, and I think that says something. I think people want their careers to matter. They want to be not only earning an income, but they want to be contributing toward something that makes progress in society. And for people, a lot of people see this space as a place where they can have an impact. I think too, it's interesting to think about. I spent a lot of time with folks from Generation Z, and it's a different. I mean, it's a new generation, right? Digital native. We're talking about people that have grown up in a world where the internet has existed their entire lives, and Bitcoin and blockchain has existed for all of their adult lives. And for those folks, I'm continually sort of amazed, because when you talk about blockchain and crypto, it's not this thing of like, well, should it exist or not? Like they just assume that it exists. It's always been a part of their lives, and they see it as a default set of tools for building new financial systems. So I think we're we're only going to continue to see. Yeah, there are many reasons why this space is one that will last. But one of the most significant reasons, I think, is for demographic reasons, and that the people that are emerging to be kind of the builders of the future, this is what they want.
And it's also, I mean, this is the first time actually, and we've been speaking about this for a long time, Helen, but it's the first time I've really thought about the convergence of talent, bizarrely, from what I do for a day job, the convergence of talent in this space, because you mentioned there the interesting generational part of Gen Z taking it for granted. We've also seen, going back to the trust thing with FTX, about people in there who are very digitally native, making decisions that need the experienced heads in the room to be able to do it from both sides. And it comes back to that sort of talent, that talent piece of seeing a necessity in this industry or this world for the best of both. And I don't think there's too many spaces where you see that coming into play.
I also think, Toby, just to go on Matt's point there, that it really is in part due to the excitement and the rapid pace of change and innovation that not only attracts people into the industry, but keeps them here, and the ability to work with folks all along the spectrum in terms of their background. So it's not just, young professionals who want to come in and be a startup and build, but oftentimes they're facing off against seasoned, in our industry alone, financial services people who have been very storied in their careers on the buy side or the sell side. And so you get a benefit of learning from those people, but also being in a peer group that is really pushing the envelope in terms of change. And there's a little bit of Hotel California, as Matt hinted at, in terms of people, you can never leave once you get in. I've had a lot of people who have come into the industry and said, I'm going to try it for a year or two. And, and even myself, when I joined Arthur Brito to start PolySign, I thought it would be a very binary outcome. And within 2 years, I would know whether or not this was a moonshot or a dud. 5 years in, and it's, the story is still very much unfolding. And because it takes longer, but it's more than anything, the excitement level that keeps a lot of people in this space.
I agree with that completely. Helen, carry on.
I think that's true. I mean, the adrenaline of being involved in, fast-paced technology, innovation, something that is, I know cutting edge is a word that gets overused, but, it is really at the cutting edge of what we can do, and bringing different technologies together with blockchain or distributed ledgers and tokenization provides another whole layer that, there's just so many permutations. I got into this because I got involved in a Bitcoin conference, just thought I'd get involved in one conference, that would be that. I just got sucked in, by this whole idea of blockchain and what it could do to different industries and how it would revolutionize healthcare or supply chains or creative industries. And I kept coming up with different examples of the media, things that I knew about, from my previous career, which was nothing to do with tech. And so, both sides need each other. When I came in, I was thinking, well, there's amazing technology movement, but there's a lot of developers here who've got great ideas, but they don't have commercial experience. They don't have experience in how to actually grow their businesses. They don't have policy and regulatory knowledge. They're not going out to the policy world and explaining what this technology is and how important it is to preserve it so that we get the new jobs. And, there were a lot of aspects I could see from my own previous career working in public policy that were not being covered by the world that I was moving in. And so I was encouraging other people to come in and say, look, we need all these different talents. It's not just technical talent, to make this a really mainstream thing. We need all of these different, marketing skills, public policy, lobbying skills, various skills that we need to really make this into something that's part of our everyday reality.
I think this is a really interesting piece actually about the motivations of people and why they take jobs in any sort of sector, particularly tech talent. So traditionally I think people would say, right, where's the money and where's the security in terms of what we're looking at? And I think this world has got potential for massive upside in terms of the finances behind it, where other areas are being squeezed. I think everyone recognises that security in any sort of industry at the moment is tenuous, as we've seen with big tech layoffs and everything else around that. So the risk factor comes down off the back of that alongside it. But something that is, and you mentioned generationally, something that's incredibly important, I think people play down, is actually how things are changing, how you're having an impact in your job, what you're getting exposure to technically, but also what you're doing to change the world, so to speak, and how you can make life better. And that narrative and that storytelling is incredibly powerful to attract and engage and retain the best talent in an industry. And it's something which I think isn't explained well enough to people when they're thinking about those sort of moves and where they go. People generally tend to revert to here's the cash, here's the bonus, here's the upside in terms of equity or percentages, etc., etc. And there's a whole very, very powerful narrative around all of this sort of thing. It's my favorite subject in the world, so I can talk about talent all the time. But let's move it back to which Helen, I think you spoke to a little bit earlier on, which is about the central bank and central bank digital currencies. And what we're seeing and the movement around there. There's been a big, again, rise in the UK about what can happen with that. And where things again accelerate within digital assets, it seems to me to be one of the those inevitable, inexorable sort of movements in terms of where we're looking at. But there's a lot of, I guess, resistance in certain areas and barriers to reach within it. What does that look like at the moment? Actually, Matt, maybe if we start with you on that, what can we expect to see between digital assets and digital currencies and central bank currencies? Look at where we head with that.
I think that. Well, so as I mentioned, kind of we talked about a bit previously, I think there is sort of this trend toward tokenizing everything, right? And currency is really the first real world asset to be tokenized, right? Initially in the form of stable coins, and a number of companies, a number of countries are looking at CBDCs as well. I think that I'll be honest, I kind of have like conflicting views on CBDCs myself, and like whether they, whether they're appropriate for the context that I live in. But I think that we are seeing tokenization normalized, and to the extent to which CBDCs emerge, I think they do serve to sort of normalize the tokenization of value, right, as something that can happen, and look, I think if properly constructed, can have direct benefits and value to society. But that said, I think it's going to take a long time, and I don't know whether the challenge of CBDCs, right, is it so much depends on the design choices, right? It's not like there's just like a single CBDC and they're all going to look the same. They're probably going to be. It's part of the reason I have conflicting views on CBDCs, because they could mean so many different things, right? They could really be a tool for surveillance, or they could be something that replicates the properties of cash, right? And if they replicate the properties of cash, I think that they could be tremendous. And I think one of the design decisions or choices the policymakers will have to make with CBDCs is, are they made directly available to consumers, and can they kind of exist within a DeFi environment? Or are they sort of intended to serve, other purposes? I sort of think that CBDCs will be something that will probably be repackaged, actually. So you could imagine stable coins that are composed of CBDC, a single CBDC or several CBDCs. I think you'll see that for a number of reasons, including that there's so many different blockchains that for a central bank to have a CBDC that is compatible with every blockchain would be, there's just a few governments that frankly that I think would have the capacity to be able to do that. I think what's more likely is that, they will be packaged up by private sector actors in a way that makes them compatible with a variety of different blockchains.
I think Matt brings up a really good point there. I was thinking back as Matt was speaking about, there's different design implications. And after COVID, if I had this right, I think in China, there was a experiment. Obviously, it's in the crosshairs when you think about, potential surveillance, but put that to the side for a moment. The ability for them to essentially airdrop digital yuan into wallet holders essentially happened overnight. And then you compare that to what happened here in the US, where relief checks were literally printed and mailed to US citizens who then had to take that check and go to the bank and deposit. I mean, it's mind-blowing how different those two experiences would be. And so I think there is certainly a utility that can and likely will come, I think, from CBDCs in terms of just smoothing the wheels of commerce, payments, et cetera.
Well, that's the massive desire, isn't it, as well? Sorry, Matt, carry on.
Yeah, no, I'm just going to riff on that a little bit. I mean, I think it is striking, like, when you think about kind of what happened during the COVID era in the US, with not only with direct stimulus payments to individuals, but also with these PPP loans, which are to small businesses, is very difficult. If you're a small business and you did not have a banking relationship with a large bank like a JP Morgan, it's very difficult to get access to those programs, which is deeply unfortunate and exactly, kind of not what you would want, right? If you want to reach the most impacted, then probably the most impacted small businesses are going to be those that are banking with a local institution, right, as opposed to a big national institution. So the ability to program money and quickly disperse money to people, I think, is incredibly important. And would be fantastic if we could see that. But I also think it's not going to be just like one solution to rule them all, right? So those solutions may emerge, but I don't think they're going to be at the expense of private sector led stablecoin solutions or other types of solutions.
Yeah, I think that whole piece is fascinating and creates a whole plethora of questions, as you say. And is there a one size fits all solution? Probably not. But is there a lot of iterations to happen over the next couple of years to create something that allays the fears of mass surveillance and Orwellian sort of scenarios for things to happen? I think it's a very interesting thing to watch as it continues. Helen, we had a full hour on this yesterday, and I know it's been the sort of underlying theme of what we've been talking about, but maybe a little summation of 4 or 5 different people's views and passions in that conversation is what actually can be built, what can be done to restore trust in digital assets. It sort of came down to, if I summarize sort of 3 areas of that conversation, it was politics, a mixture of politics, regulation, and communication were the main sort of themes that we took away. But having sat on that and digested it for 24 hours, what do you think is at the epicenter of restoring trust in the industry, which you can argue as to whether it was if it needs to happen or otherwise, and actually what needs to be built to allow that to really happen and for everything to continue at the pace that we've seen at various different stages in the journey so far?
I mean, I think this sort of trust exists on a spectrum. So, those that were already skeptical about cryptocurrency and digital assets prior to FTX and all the other things that happened in the market,
rubbing their hands.
Obviously, it only emphasizes their existing concerns or their existing prejudice against the industry. And I think that's true in certain elements of politics for sure. I think the Labour front bench here in the UK, who might well end up being our next government, are certainly still pretty skeptical about the industry and are kind of keeping away from it because I think it's sort of a not a vote winner. At the same time, I do think that there are many people who do understand this better but could be doing more. So I think the industry has certain steps, particularly in financial markets. There are things that exist in traditional finance that could be brought in to the digital asset market that would enhance trust. I mean, people following the best standards and good audit procedures, all of these things. I mean, Jack and I have spoken many times before about separation of trading and custody, basic things that we wouldn't allow to happen in traditional finance still happen in the digital asset market. And that obviously is evolving and changing now, which is probably a good thing. I think also, we do have to continue to educate. And obviously that's a lot of what I do in my work, is talking to people, explaining different business models, explaining these concepts around, I mean, just even going back to the conversation about central bank digital currency, there are many new forms of digital money. There's the central bank digital currency, which is a claim on the central bank, but there's also privately issued stable coins that might evolve into different forms, as was mentioned, which is really, really interesting. There's tokenized e-money, there's tokenized deposits, there's a lot of different parts of that. And those are all distinct from cryptocurrency. And there's still people that don't really understand those distinctions. So it's great that tokenization is now seen as non-controversial, but some people still need to know what tokenization means and what the different types of tokens are. And a token could be a currency, it could be a security, it could be a version of central bank money. So all of that kind of needs to be unpacked and explained, particularly in the policy and the regulatory world. I think there are certain kind of leaders in that, certain politicians in different countries who have embraced this and become specialists, or specialized enough to be able to talk about it sensibly, but there are lots and lots of other people in the political realm who just don't really touch on this subject at all. And coming from that background I do, of having worked in think tanks and with politicians, they're very time poor, like we all are. So we have to find really quick, simple ways of presenting this and presenting the use cases. Like you said, it was same here with business loans during COVID in the UK. If we could have airdropped money to people, we could have sped up a lot of businesses that was really struggling. We could have helped individuals. And I think for a digital pound, what is a well-designed digital pound? Obviously we want to protect people's privacy and we want it to work properly from a technical point of view, but also a well-designed digital pound would hopefully have some use cases, using the programmability that we have with digital currency to, improve welfare payments, or, improve sustainability, or, have different features that we can't do with traditional cash. And so cash can become something that we can instruct and something that we can direct to do the things that we want it to do. And that's one of the really interesting, exciting innovations about all this tech trend that's come out of the birth of Bitcoin, is understanding that you can tell your money what to do. You can have a smart contract and you can decide under certain conditions what will happen to money based on various things that you need to happen first. So, that's just something that a lot of people don't realize. They think, well, digital cash is just the same as, why would I not just beep my phone, do contactless payment? It's not digitally native cash, and that kind of differentiation is probably not coming out strongly enough, I think, in the discussion.
Yeah, absolutely agree. And Jack, you weren't involved in the conversation yesterday, and obviously looking at it from the other side of the pond as well. I think it's a very interesting sort of opportunity to look at it and say, right, there is almost a different and steeper element of trust to be built within that sort of space after everything that happened on home shores, so to speak, last year. Tell us about what you think needs to happen across the industry to do it. And look, you mentioned it beforehand. There's been some major players who are putting into it. That's a big trust play in itself. The more institutional organisations who get involved in it breeds that sort of confidence. And this is the nature of the beast, which I think can't be underplayed. But tell me, it's not just. I think there's a very clear desire for some people to throw it over to the regulators and say, fix this and make it nice and neat, etc., which I think everyone has a responsibility to lean into this. What's your take on the trust issue?
I agree with you that we're judged by the company we keep, and so trust can become a self-fulfilling aspect to this industry. But I've said for a long time, I think there's three factors that ultimately will augur in particularly institutional demand into the space, and in no particular order. It's regulatory clarity, it's infrastructure, and it's education. And education, things like this podcast and others, I think themes around the industry are getting more well-known, more understood, and I think there's a collaborative conversation that continues to evolve and draw in really the best and brightest of capital markets, which is great. Infrastructure, where we're focused, continues to improve and is starting to look more familiar to particularly a lot of the TradFi players, to get them more comfortable. There are more service providers like standard custody that are regulated, that are insured, and so that's starting to feel better and instill trust in market participants, which really leaves the regulatory clarity. And particularly in the US, we need to sort that out, and we need to get some uniform views. I think the reality is that most participants in the industry favor regulation to come. We just want to know what the guideposts are. And as long as it's reasonable and not overarching and overreaching, we would welcome it, because ultimately that's going to be required, we think, for a healthy and functioning marketplace. It is starting to happen outside the US, as Matt hinted at, in the UK and the UAE and Singapore and Hong Kong, Switzerland, et cetera. And so there are developed, very thoughtful, conservative markets that are getting the joke here and are making advancements. And I think the opportunity for the US to get that sorted and to be a leader still exists, but we've got some work to do here.
And there's the beautiful advantage of letting everyone else come up with the answers and then being able to deal with it afterwards and still the march is not a bad strategy sometimes, isn't it? Matt, coming back from that sort of that's a regulatory background that we were talking about earlier on, what do you think some of the keys are to that drive to restore faith and trust in the sector?
Yeah, I think that Helen and Jack have both raised really good points and ideas there. I think for me, a few things I'd highlight. One is the passage of time. Unfortunately, I mean, I think like regulators have a long memory, and part of this is just letting some time pass. I think that there's also this generational aspect of it that we've talked about, which is an important part of that. I think leadership is the second big area, leadership in government and leadership in the private sector. If you look at kind of the countries that have been leaning into the space, they tend to have leaders who are a bit younger than the leaders that we have in the United States. And then on the founder side, I'll tell you, like, capital is much more scarce now. It's much harder to get capital as a founder. And, you know, the upside of that is that the founder quality is just much higher, right? If you're a founder who can raise money today, you know, there's something special about you. And so I think that, you know, that we're going to see a next generation best of breed set of founders emerge in this space. To me, that's very exciting. And then use cases, I mean, we've talked about it, but we need use cases that, like, that would make sense to my mom, right? And to my mom's mom, who's probably more the generation of folks who are elected in Washington. But we need that. And I'm very optimistic. I mean, I think we've turned a corner, at least right now. As Jack pointed out, given the moment we're in right now, I'm feeling very
give us a week.
And I think that, look, there's this international competitiveness aspect to it, which is very important. And I think that will have an impact in the United States and elsewhere as well.
There's a classic case of keeping up with the Joneses there, isn't there? And people moving based on not wanting to lose out. And there's a huge political agenda for every government in the world. We're going to see some major changes over the next couple of years, and big elections happening in, you know, some of the most powerful nations in the world, and that has a significant impact into, you know, what needs to happen, and governments backing this sort of thing and making it a priority, I think, is a significant march to what actually can happen in the space. We could be talking about this a long, long time, and I know, particularly speaking to three people who are super passionate about it, here is a conversation that could be lasting for hours and hours and hours. But I want to just finish on a point, Jack, that you were talking about. It's very interesting for me to hear that you're on the move again, with people coming back into the to the company and attracting people into it. I was interested to hear what you said about, you know, people I'm thinking of a better word than freaking out about being in the space, and when they should go back into more stable homes, etc. I'm interested to see what you think can happen, and whether even digital assets firms can continue in challenging climates with uncertainty. As we said, look, one thing we've said is, you asked me 2-3 weeks ago, it'd be this. Today, I'm saying that. Tomorrow, we don't know what's going to happen along various different stages, other than the fact that I think it will keep on edging further forward. That's inevitable. But tell me a little bit about how and what firms can do to continue to attract, which I think is such a significant piece, the best talent to the digital asset space, with so many headlines that potentially would freak people out to join it.
I think it comes down to a couple of factors that are not unique to this industry. I think we've got some tailwinds in the industry, just so we were talking about earlier. If you want to work in a startup environment where the opportunity to have significant impact is really profound, exists elsewhere, AI, other places, but this is one, so it's going to already attract certain people. But then I think it comes down to leadership, management, culture, which again is not unique to this industry. But I think having a leadership that articulates a vision of where the company is going is critical. How a given company fits into the ecosystem, having a kind of mission-driven sort of style within the organization is critical. And then culture is everything. Culture. Other folks more seasoned than I have said culture trumps strategy, day in, day out. And so it's all about attracting people to the organization, but then treating them well day in, day out, giving them responsibility, giving them opportunity to grow, treating them with respect, treating them with trust, which is a core value of ours here at PolySign, having accountability within the organization for everybody, top down. We really prioritize ownership, and so every employee owns equity in the organization. We think that's really important. But I think it's just basic blocking and tackling of how you treat your people, because if you treat your people well, you'll in turn treat your clients well. If the clients are happy and the employees are happy, the shareholders do well. And so it all starts with, I believe, culture and how you treat your employees.
It's sometimes the simplest things that sort of come back to that. Matt, you were talking about the sort of VC and PE money that's going into businesses at the moment. And I actually think it's a good thing, because there was some terrible money going into some terrible businesses before, where it was easy at ridiculous valuations. And I think you're right that probably one of the good things that's happening at the moment is if money's being parted with, it's going into proper players. And that's the same thing with employers. But if you've got a company there that's growing and taking people on, one of the things that I always think people should look at is who are they working for, and what's the values and the credibility and the credentials of that particular individual, and where they're going with the business. So yeah, look, I know we're under pressure of a hard stop, which I promised I would get towards, and we've lurched towards it in impeccable style. So this is a conversation that could have been, as I say, 2, 3, 4 days, let alone 20, 30, 40 minutes. So I thoroughly enjoyed it. Last thing for me to say is Helen, Jack, Matt, thank you so much for joining us on FinTech Focus today. So much insight. There's definitely going to be more conversations that need to be had on all of this. So thank you for joining us, and loved having you on the show. Thank you very much.
Thanks, Toby.
Thanks, Toby.
Thanks for having us.
Absolute pleasure. And thank you all for watching. We will see you soon on another episode of FinTech Focus TV.